Welcome to IG's Trading the Markets podcast. In the wake of the news of the 80-seat majority now held by the Conservative Party in the UK elections, markets rallied strongly. Equities had a relief rally with those threatened under a Corbyn government of nationalisation like utilities rising to record highs in some cases. Sterling also had a spectacular rally in the immediate aftermath, but now much of that has all been unwound due to the announcement that the Conservatives are wanting to enshrine in law the deadline of the 31st of December 2020 as the final day of the transition period for Brexit. Critics say that this raises the risk of a so-called no-deal outcome. Joining me today is Charles Hecker, Senior Partner at Control Risks, a specialist risk consultancy where he's responsible for shaping Control Risks' thought leadership on geopolitics, global security, political risk and their impact on international business. Charles, good to talk to you. Before we take a look at the timetable, to what degree does the Conservative Commons majority change things for Boris Johnson and his team politically?
Well, it changes things potentially in a number of respects. First and foremost, most importantly, it gives the Prime Minister an overwhelming majority so that whatever sort of direction he decides to take on Brexit, he will, without question, have the votes that he needs to put that legislation through. Secondly, I think it provides him a little bit of domestic flexibility on the shape and sort of the look and feel of Brexit. The size of his majority means that he no longer has to exclusively cater to either the softer Brexit advocates or the harder Brexit advocates in his party. And I suppose everybody is wondering exactly where the Prime Minister will come down. What sort of Brexit will he craft, safe in the knowledge that he's got the votes to take it forward?
Do we get an insight into this, do you think, because of the suggestion that they're going to enshrine in law this 31st of December 2020 deadline for the complete conclusion of the extension period for Brexit? Does that, in some respects, now drive down his options?
It does. The sort of common perception around this is that by forcing the UK to end the transition period at the end of 2020, the Prime Minister has, to a certain degree, painted the country into a bit of a corner. But I think that that's probably exaggerated. You'll recall that Boris Johnson was initially against any extension of Article 50. He was initially against the idea of snap elections. And there is a certain amount of likelihood that this deadline of ending the transition period on December 31st of 2020 will go the same way as all of the other hard stops that the Prime Minister has forecast before. Most importantly, perhaps, early word is that Brussels is not taking this deadline very seriously. What the Prime Minister is saying is that he can get a free trade agreement with the European Union signed, sealed, and delivered in 365 days, and there are really very few people who believe that that can happen.
But is that deal not already partly hammered out? I think I've heard it said from politicians that even the negotiations under Theresa May gives Boris Johnson a considerable amount of early ground already covered because of the negotiations that have happened. Is that not the case?
You're right. I mean, the government is not starting from a standing start here. There is a certain amount of momentum already behind negotiations, but there's still quite a lot of detail to be worked out. And I think the skeptics who are saying that there's no way that a trade deal can be concluded within a year are pointing to things like the trade deal struck between the EU and Canada, which is a much smaller trading partner of the European Union, and that deal took 7 years.
How do you therefore rate the risks of a collapse and a no-deal outcome if you think that there is going to be some sort of ability to take this forward ultimately for whatever reason, however it's done legislatively? Do you think that there is still a no-deal risk, or are you really thinking that that's something that is not going to happen?
Well, our view is that it will be indeed very, very difficult to execute a free trade agreement in the next year. And we do believe that the Prime Minister at some point will have to ask for an extension. I think everybody in government and everybody advising the government understands that the potential impact of a no-deal exit from the European Union is the potential impact is catastrophic on the British economy, and everybody understands that. Nobody really wants that. I think what's happening right now is you're seeing a certain amount of posturing, a certain amount of positioning. Boris Johnson is hoping that by imposing these deadlines, he can focus the mind not only of his own government but of his counterparts in Brussels, his trade negotiators on the side of Michel Barnier. I think he's hoping to pressurize them into working as quickly as possible. That's probably not going to work. The interesting wrinkle here is that if the UK government is going to ask for an extension to the transition period, it has to do that by June. So there's going to be an awful lot of forecasting happening in the first 6 months.
Okay, well, let's assume that negotiations do go as planned and it's all relatively simple. I can't see that's necessarily going to happen, but let's just assume that's the case. And then take into account a comment I heard from Sir Martin Sorrell, the Executive Chairman of S4 Capital, formerly the Chief Executive, of course, a founder of WPP. He said that post-Brexit, he's looking for the UK to be Singapore on steroids. I mean, he's suggesting a regulation-light, tax-light economy, open for business globally, like we've never seen before. First of all, how do you rate the chance of this happening? And second, how would it change the British economy if it were to come to pass?
Yeah, I think that's a very interesting analogy. You hear a lot of people talking about the United Kingdom and London in particular as one of the world's biggest financial hubs of turning itself into a Singapore on steroids, exactly as you've quoted. This is a really interesting analogy because the UK economy and the London economy is already, multiples the size of the Singapore economy. And we already are Singapore on steroids. Singapore, I think, would be very happy if it became a global financial capital the magnitude of London. But I think what's at work here in those sorts of analogies are changes or the potential of changes to the regulatory environment that will attract capital to London and to the UK once it's out of regulatory alignment with the EU. And that puts the UK in a slightly difficult position. It's not going to be able to write regulations exactly as it pleases. There are some strands of thought in the government that we have to stay as close as possible to EU regulatory regimes in financial services and not only, just to facilitate ongoing trade. There will also be significant pressure to go into some sort of regulatory alignment with the United States in order to close a free trade agreement with that country. So the flexibility that the UK has to completely write its own rules in an absolutely custom-made fashion is fairly circumscribed.
Just one final question out of this, and the relationship with the UK and the rest of the world in terms of security. This is clearly a really big issue, undoubtedly something that you've been discussing a lot with your clients. Do you see a breakdown in the cooperation that we have seen between obviously the UK and the EU because we've been part of the European Union, but globally as a result of Brexit? Or do you think these are bridges that are likely to be kept and that security will be upheld?
Yeah, that's a really important point. Some of the UK's security cooperation with Europe and with the EU is automatic and will continue. Some of it is bilateral between different nations in Europe, and that will also continue. And some of it will have to be renegotiated. I think that there's substantial impetus for the UK to remain closely aligned with Europe on security terms. The world is sort of evolving quite possibly into a new geopolitical architecture that will have hubs in Washington and Beijing. And the pressure will be on Europe, and I don't mean just the EU, I mean Europe, of which the UK is, of course, a part. The pressure's on Europe to raise its voice and to amplify its authority as a security player in this bipolar world between Washington and Beijing. And I think that the EU will need the UK will need the EU to create a European security presence. And I think that's the way forward in the immediate future.
Okay, look, Charles, we'll leave it there. But thank you so much indeed for joining us with your view as the Conservatives try and inch closer to that certainly 31st of January deadline for the first stage of the Brexit deal. That's Charles Hacker, Senior Partner at Control Risks.